All righty, guys. We're going to go ahead and get started. It's 11:02. Thank you everyone for joining us. Good morning, everyone, and a warm welcome to today's webinar titled Navigating Tax Incentives, Energizing Biochar Finances with Waste Heat to Power Generation. Proudly brought to you by Electrotherm in collaboration with our distinguished partners from K.E. Andrews. I'm Ashley Edge, your moderator for this session, and it's truly a pleasure to have each and every one of you joining us today. Thank you for taking the time to be here, and we're truly excited about the valuable insights that we're about to explore. Before we dive into our discussion, let's take care of a few housekeeping items. Firstly, rest assured that today's webinar will be recorded for your convenience, and the recording will be made available for your on-demand viewing at both electrotherm.com and Electrotherm's YouTube channel. Additionally, you'll receive an email within a short time frame post-event containing the recording link and any additional resources discussed during this session. We encourage you to revisit the content and share it with your peers who have maybe missed out on today's event. Secondly, while we may not be able to see your faces or hear your voices, we're keen to make this session as interactive as possible. Please feel free to submit your questions at any time during the presentation using the Q&A feature at the top of your screen. We've allocated 15 minutes at the end of the webinar to answer your questions. So just drop those in the Q&A and we will get to those at the very end. All right, our first presenter is Natalie Van Dyke. She's the sales director with Electrotherm. Take it away.
Hello. Oh. Right on cue. The first thing that happens, my microphone fell out. Good morning, everyone. Happy Tuesday. I have been watching people come into the lobby and I see a lot of very friendly names and people I recognize. So thank you everyone for joining. As Ashley said, I am Natalie Van Dyke. I am the Director of Sales for Renewable Energy and Sustainability Strategies with Electrotherm. And I am incredibly blessed today that we are being joined by two absolute rock stars of the financial world, Caitlin Glenn and Macy Smith. Ladies, if you'll wave, from K.E. Andrews out of Dallas, Texas. They will be leading us through the lion's share of the portions that you are interested in today. But before we jump into the show me the money portion, as I know we could call it, I'll give everyone a short, brief history of who Electrotherm is, and again, a very high level of how ORC works. So today, for our goals, we are going to introduce Electrotherm and K.E. Andrews. We will, as Ashley said, be discussing the tax credits, which are potentially available to biochar projects incorporating waste heat energy strategies. And hopefully at the end, we will be answering lots of questions related to your applications, because I know that this group has a lot of questions. So we will be definitely saving time for that. Electrotherm, if you're not familiar with us, we are the global leader in low temperature organic Rankine cycle systems. We are supported, we're actually manufactured in Flowery Branch, Georgia, just outside of Atlanta. We have a US manufacturing center, but we are supported by the Bitzer Group, which is a leader in compression, refrigeration, and air conditioning technology. Electrotherm has over 100 installations worldwide. That's actually closer to 150, I believe, maybe 200 in 14 countries, and over 2.5 million operating hours in our fleet. We've been in business, established in 2009, acquired by the Bitzer Group in 2015. We are not a new company. We are an established, mature company, as is our technology. And what is our technology? It is an organic Rankine cycle, which is a fancy way of saying a heat engine. We are an engine that runs on heat. We are able to take hot water, which almost anyone has or can create, and pull energy from it and create electricity out. The way we do that is with the organic Rankine cycle. The organic is actually a reference to refrigerant, which operates inside of the machine. An organic Rankine cycle is at its heart an HVAC or refrigeration loop run in reverse. So all we have here is heat is brought to the machine via a hot water circuit. which interfaces with an exhaust gas or exhaust, excuse me, a plate heat exchanger, or we can take that heat from an exhaust gas, which is what I was trying to say. But we take the hot water to the machine, interfaces with a plate heat exchanger, which then boils the refrigerant inside. And that's where the magic happens. That creates pressure in the vapor, which is fed to the twin screw expander, which you see here in green. And inside of that expander, there is also a generator. And that the expansion creates mechanical work to spin that generator, which places electricity out. On the other side, the vapor is cooled down by a cold water circuit, which also is integral to our system, and I can explain more of that later as well. But it cools down, the refrigerant is pumped to the high pressure again, and the entire system repeats. This is very simple. All this does is it operates on the very simple, elegant principle that high pressure will move to low pressure all the time. Just the same way you open your window and heat goes into a cold area. That's what's happening here, but we utilize it to create energy. Very simple, very elegant. What temperatures do we need? We are between 150 and 300 degrees Fahrenheit. That is considered a very low temperature in the hierarchy of heat recovery. This is a Goldilocks zone. And this Goldilocks zone also happens to be exactly the space that most of the heat that we can recover in many, many multiple pyrolysis applications. So we are a very, very good fit for this market. We have looked at many multiple technologies, and we have been able to find a way to interface with them repeatedly. So if you have a system and you're interested, please contact us. This is just the highest level example of what this does. You take your biomass, it goes to your pyrolysis plant, whatever version of that you have, okay? And from there, you can interface an Electrotherm or other ORC, and you are able to create renewable power out. Should you need that heat for another utilization, such as drying, we can work symbiotically with it. We're very happy to, okay? And you're also able to create your biochar and do your carbon sequestration, which is no doubt what is involved with what you're doing. And many of you we know are seeking carbon credits, okay? Which is also the show me the money portion of what is going on here. We're very clear on that and we understand it. Adding renewable power to this is going to allow you to be more financially stable in many factors of what you're doing. But today we're going to talk specifically with regard to how adding electricity generation through ORC can be financially beneficial to your CapEx. And with that, that is the very high, very fast, down and dirty how ORC works. I will turn it over to Caitlin and Macy, who are the experts in what comes next. Ladies, please take it away.
Thank you, Natalie. It's great for you to host us. We really appreciate you inviting us to join you on this webinar. So I think the first thing is I want to introduce you to our company. K.E. Andrews is a 40-year-old tax advisory company. We provide services related to property tax, sales tax, severance tax. We live in this credits and incentives world that kind of touches a lot of different taxes. Our credits and incentives practice actually services companies through multiple levels. So at the federal level, what we're going to talk about today mostly is credits. We also have an in-house grant writer that can help companies secure federal grant money. And then at the state and local level, we assist companies as they're establishing new facilities, doing site selection. We do data analytics around labor, taxation, and we can produce forecasts that help you make a better decision of where to select a site. If you've already selected a site, we can help you with negotiating incentives and then the compliance around that. We have a proprietary SaaS system called EDOIQ that I'll talk about the value of that here in a little bit. Macy, do you want to take it from there?
Yeah, absolutely. I'm Macy. I'm with KE Andrews, and I do all of our federal tax incentives, grant writing, and then I assist with the site selection and data analysis as well. So we're really excited to be here with Electrotherm to talk about how the pyrolysis systems can qualify under the Inflation Reduction Act that was passed in August of 2022. This is just a brief overview of our background, and this will be available for all viewers to review later on. Going back to what Natalie said, this is the primary energy property that we're looking at. This is her and Electrotherm's Organic Rankine Cycle and Pyrolysis system. We're going to be really diving in deep on how this qualifies under the Inflation Reduction Act and what potential credits are available for consumers of this product. So a good place to start is, what is the Inflation Reduction Act? Because we've heard of the ITC for many years and probably the PTC as well, but we've heard about a lot of changes since 2022. Isn't that right, Caitlin?
Yes, the value of the credits has increased substantially. The transferability of the credits is actually what is making these so attractive in the market. And we'll get into monetization a little bit later.
Yeah, absolutely. So right here, this chart you're looking at is just a brief overview to help us navigate as we talk through this. We get a little bit into the lingo, and so I just want to make sure everyone's aware. The investment tax credit can also be known as Section 48, and it is calculated based off of the investment into energy property. So you can start at a base credit of 2 to 6%, depending on the energy property that's placed in service. But the maximum credit you can get on your investment is up to 50%, which is significant.
Yeah, if you want to be the star of a cocktail party, you can start talking about the difference between Section 48 and Section 45, which you will be well educated on after today's session.
Yes, absolutely. Section 45, known as the production tax credit, or the PTC, is a credit based off of the amount of electricity that is produced from renewable energy. So it's not so much about the property being placed into service, but if renewable energy is being produced, and it is a base credit of 0.3 cents per kilowatt hour annually, but with the maximum credit, you can receive up to 1.5 cents of credit per kilowatt hour annually.
So I think the most bang from your buck, for the most part, will come from the ITC for a number of reasons. The value of offsetting up to 50% of your capital investment is significant. And then also the ability to monetize it right up front, as opposed to having to wait and monetize it annually for the production tax credit.
Yes. Another thing to note about the difference in between these two credits, the investment tax credit is a one-time credit based off of your investment in property. You will have to track compliance on this, but it would be a maximum of 6 years for the year it's placed in service, and then the 5 years after that. For the production tax credit, that is typically a 10-year tax credit. So you're looking at maintaining compliance for up to 15 years, which can be a significant burden on lots of companies.
All right, I think let's get into how they become eligible for this funding, or the show me the money, as Natalie likes to say.
Yeah, this is the part everybody wants to hear. This is the part. Okay.
We'll get into the fun stuff here. Before we start talking about money, one of the things we really need to talk about is placed in service date, because the day you start construction, the day your equipment is placed in service, and the day that these credits sunset can significantly impact the amount of credit that's available for you. So any project that started construction after January 1st of 2022 is eligible under the increased values of the ITC and PTC. But if your property is placed in service after January 1st of 2025, then you are no longer eligible for those credits. So you really have to hit that window of after January 1st of 2022 and before January 1st of 2025.
Macy,
Oh, go ahead, Natalie.
I just want to ask a question. If so, so if we have a situation where the someone has placed an ORC or placed a pyrolysis unit into service, say during the period of 2023, but it did not have an ORC attached. If they attach an ORC before January 21st or January 1st of 2025, then they would still be eligible for that credit, the credits that we're talking about. Would that be correct? Even though
Yes.
it's after the fact?
Yes, that is correct. So we would always recommend advising a tax advisor that's familiar with your specific situation. But given the example, I would estimate, yes, that would qualify.
Very interesting. Thank you.
What's a good question that we get all the time? What does start of construction mean? Macy, like, how do you know what is starting of construction?
Start of construction can be defined by a lot of different ways. The Secretary Treasurer released an announcement that put two primary ways to define the start of construction. One is 5% of capital expenditure is spent. That's start of construction. The other is related to labor hours worked. So once you have men on the ground, breaking ground, started construction, that would qualify as start of construction. The important thing to note is if you started back in 2021, but then construction was paused for some reason, and you can prove that it was paused and then started again, you can reevaluate that start date because construction must be continuous to have a start of construction date.
All right, can we talk about the money now?
Yes, we can talk about the money now. So when looking at these credits, the very first step is to determine how you're eligible. We've talked about the ITC and we've talked about the PTC, but how do you know which one you qualify for? This flow chart here is a short example of one way to determine if you're eligible. Most of the people listening to this webinar has a project that creates energy. So you're there, you're on the right track.
So you start here, does project create energy? That's the first criteria?
That's the first criteria. If you've determined that your project creates energy, then we're going to look and see if the energy is sold to an unrelated taxpayer, like a utility district, or someone that has a third-party arm's length agreement with your company. If that does not fit your company's definition, then you would move on and qualify under Section 48, the ITC. If that does fit your company's definition, then you could also qualify for the production tax credit. Just because you qualify doesn't mean you have to take it. You would also qualify for 48, and you would be able to determine which one is most beneficial for your project and then select which option you would like to take.
Right, so you can take one or the other. You cannot take the production tax credit and the investment tax credit. So what we recommend, and we do for a lot of our clients, is we do a model of what the expected tax credit value is. And then, once the model is complete, then you're making an educated decision on which route to take for the most value for the credits.
Yes, absolutely. Once we've determined which one you would like to take, under Section 48, we're going to evaluate your energy property based off your project. So the definitions here listed on the right side of the screen are eligible energy property. These definitions include qualified biogas property, waste energy recovery property, which is most likely what the ORC and pyrolysis systems will fall into, or combined heat and power systems. All three of these definitions could fit an ORC and pyrolysis system, and they would qualify for that base credit of 6%. However, if you installed property that doesn't fit one of these definitions but is creating energy, you can still qualify for a lesser credit.
All right, so we're talking about values of 2% and 6%. I thought you said that we could save up to 50% of our CapEx.
You can once we look at the bonus credits. So once a company has determined their eligibility, then we can start and look at the big bucks and see how we can increase that credit based off the other things we do throughout the life of our project.
Now you're talking. This is what we want to hear.
Absolutely. This is the fun stuff. So the first place we would look is how much energy is your project producing? Does the project produce greater than 1 megawatt in alternating current? Most likely, if you're looking at Electrotherm's products, you would be under that 1 megawatt of alternating current produced, which means you could increase the base credit amount by 5 times. So your 6% credit automatically goes up to 30%.
So, I mean, we're supposed to be creating as much green energy as possible. Why would you want to keep it under 1 megawatt?
So if you're creating over 1 megawatt, to reach the same amount of credit, you're going to have to look at prevailing wage and apprenticeship requirements. And that has very heavy compliance aspects to it. So to qualify for prevailing wage and apprenticeship, you must pay all your workers, all construction workers, and all subcontractors prevailing wage as determined by the secretary, and have a certain number of apprenticeship on site for construction.
Yeah, so we have a client that is installing a system, and the plate on the system says 1 megawatt capacity. In reality, it's not going to really produce that 1 megawatt. So from a compliance perspective, it would be much better for them to produce that below 1 megawatt so that they don't have to track wages and hours for apprentices. So it's really important to document the electricity that's actually produced so that you can prove that you did not produce over that 1 megawatt. It's going to be very valuable to you and reduce the compliance burden of the project.
Yes, absolutely. So after we determine how you qualify for the increased credit through prevailing wage or producing less than 1 megawatt, then if you're claiming the ITC, you can also look at if your project is in an energy community or if your project meets domestic contents. Each of those bonus credits would be an additional 10%, and they are stackable. So that means you could receive up to 50% back on your investment.
So how do you know if you're in an energy community? For those projects that haven't even broken ground yet and they're looking for a site, if they want to get that 10% additional for being in an energy community, how do you know if you're in an energy community or not?
So luckily, the Secretary of State has released a map that tells us if we're in an energy community or not. So it's a super easy way. You can plug your address in and check if you meet that qualification. Unfortunately, if you don't meet that qualification, it's just a yes or no. There's not much we can do to obtain it after that. And I will be sharing that link with the viewers via the chat.
We will also send that out with our additional information when we send the link to this to the webinar itself. We'll make sure everyone has a link to that Treasury map.
Okay, so I see how you can do the up to 50% to offset your capital investment for these projects, but wasn't there something about a bonus credit for being in a disadvantaged community?
Yes, there is a bonus credit for being in a disadvantaged community. Unfortunately, it is only for solar and wind energy projects. So under this case, we would not qualify.
But if you are doing solar and wind development, that is another way that you can increase the value of your credits. But if it's just for this biogas industry, it would not be a qualification.
That is correct. But of course, we always recommend consulting a tax advisor on the intricacies of your project to know everything that it's eligible.
So the domestic content, are we going to get into that next? Is that next?
Yeah, we can go through some examples of the domestic contents. This is specific to organic Rankine cycles and pyrolysis systems through Electrotherm, but these are a few different scenarios that people can expect to see if they're placing this equipment into service.
So this is how we met Natalie. She reached out to us and was asking about the credits because, a lot of her clients were interested in the value of it. And so Electrotherm actually does create and manufacture a lot of the equipment domestically. Natalie, do you want to go into any of that? The Made in America?
Yeah, absolutely. As I stated earlier, our manufacturing facility is located in Flowery Branch, Georgia. Based on all of the analysis that, pardon me, all of the analysis that we've done based on requirements for content, we do meet domestic content standards as currently published, and we should, in all instances, adding an Electrotherm ORC to a project would bring U.S. domestic content to the scope of that project.
Yeah, so we always say this, right? Like, consult a qualified tax advisor to do the analysis on the domestic content, and always retain as much documentation as possible. So if your vendor is saying that this is domestically produced, I would recommend getting that certified and that in writing, because when the time comes and you have to prove it to the Treasury, always have that documentation on hand.
Yeah, it's really important to know what you're claiming and what you qualify for, but then also to be able to back that up in the event of an audit. So looking at this first scenario here that Natalie prepared for us, we cannot say for sure if it would qualify or not, because it's going to be dependent on the intricacies of the whole project. But if we're looking at just the pyrolysis unit, organic Rankine cycle, heat exchanger, and the balance of plant, this would qualify for domestic contents, which is an additional 10% bonus.
So what would impact it not qualifying? Is that where it's building a whole new facility? And, let's, for example, say it's $100 million facility, but the ORC, pyrolysis, heat exchanger, balance of plant only maybe represents 20% of the total investment. Even with them all being produced domestically, you're still going to have to do some deeper dive into the total cost and the total manufactured equipment that go into that facility, right?
That is correct. The big thing that's going to keep people from qualifying if they're building a whole new facility is the structural components, because the domestic content bonus really wants all steel and iron used in structural components of facilities to be sourced in the United States. So that requirement is 100% of the steel and iron throughout the facility needs to be sourced domestically. So if you're doing a whole project where you're building a facility and installing an organic Rankine cycle and pyrolysis system, you need to be aware of where your structural components are coming from.
Right. But if you're just upgrading your existing system and really these are the only purchases you're making, it's a good bet that you can qualify for that 10% bonus credit.
Absolutely. Going on to our next scenario, similar to one before, our pyrolysis unit, organic Rankine cycle, and balance of plant is all sourced within the United States, and our heat exchanger is not. I would again assume this would qualify, but dependent on the intricacies of the project, it could not qualify. So it's very important to know what the whole project is doing, what aspects are going into it, and then also consult with a tax advisor that's familiar with the code, and they can determine if you qualify for domestic contents or not.
Right, because it's 40% of the total cost. So you need to know the cost of the pyrolysis, the cost of the ORC, the cost of the balance of plant, and then compare it to that heat exchanger that may or may not be domestically sourced. So it's about the cost, not the quantity.
Yes. In our third example, this one's very dependent on cost. If we're only looking at the equipment here on the list, it might qualify, it might not. It just depends on how much it costs, how much is being invested, and what else is going on at the facility that's included in this project.
Yeah, you'd really need to get down into the weeds on this one.
Absolutely. And then our very last one, I would not recommend that this qualifies. just because if nothing except for the balance of plant is sourced from outside of or inside of the United States, then most likely you're not going to hit that 40%, and we would not advise you claim it.
So we've talked about a lot of percentages today, so I kind of want to back it up a little bit. That base credit that you qualify for, that's for the investment tax credit would be 6%. If you're producing less than 1 megawatt, it would be multiplied by 5, so that would get you up to 30%. And then the domestic content that we just talked about would be the additional 10%, so that would get you up to 40%. And then if you were in an energy community, that's an additional 10%, which would get you up to the 50%. So I just kind of wanted to clarify, that's if it's under 1 megawatt. If you're producing more than 1 megawatt, you would need to meet the prevailing wage and apprenticeship hour requirement in order to get that multiplication times 5 and up to the 30%, which we all really want to claim on your tax returns.
Yes, absolutely. Another thing to note, these scenarios, domestic contents is only related to the investment tax credit. If you are claiming the production tax credit, you cannot qualify for domestic contents or the energy community bonus credit.
So it's just that 0.3 cents per kilowatt hour for the base credit. And then if you are producing, or if you were doing prevailing wage and apprenticeship hours, then you can multiply it times 5 to get the 1.5 cents.
Yes, that is correct.
Okay, but you can't multiply it for 10 more cents because of the domestic content.
That is correct.
All right, so let's look at a sample scenario here. I think that I gave this one to you ladies. I'm very interested to hear your thoughts on it. I think this is the one that most of the people that we're dealing with today are probably going to be looking at. Many of the pyrolysis units, not all of them, but many are made overseas, as are the heat exchangers. But when they bring them here to the US, they're of course going to want to manage their CapEx as well as they can. So I'm interested to hear your thoughts on this scenario.
Yes, so under this project, we would have determined that this system qualifies for the investment tax credit because it is a waste heat to energy system. So we've checked that box. It qualifies for a minimum 6% credit. Because we know Electrotherm, we know most of their systems do not produce more than 1 megawatt in alternating current. So we know that we can multiply that 6% by 5 because they're under that 1 megawatt threshold, and they're going to be looking at a 30% tax credit. Now, if we look at the domestic contents of it, we can see that the pyrolysis unit is $500,000, which is more than half of the total investment, which means that 40% of more of our system is not being sourced from within the United States. So we cannot qualify this for domestic contents.
That's very interesting. So the 40% clearly is a very important number to keep in mind as you are scoping your entire project, correct?
That is correct.
Okay. I should mention, none of these numbers listed here are representative. These are literally ones I chose because they came out to a nice 900,000, which is something that a non-accountant like myself can work with. So that all of these numbers that are here are not representative. With that said, if in fact the 900,000 was balanced separately and 40% of the ORC and the balance of plant actually did reach that 40% measure, then it would qualify, correct?
That is correct.
Terrific. Okay. Well, everybody heard that. As you're crafting your projects, be very, very cognizant of how you're looking at this, where your content is coming from, and how exactly things are structured so that we're able to get that 50% or 30% for you. Sounds like we can get the 30%, but if you want to get to the 50%, you need to be very cognizant of how your project's structured.
Yes. So we've gone through the scenario and we've talked about a lot about percentages, but let's talk about step 3, determine the estimated credit amount and best practices. This is where Caitlin and I find our job security because it's really important to keep track of these items.
Right. You could have had the best of intentions, right, to meet all of the credits criteria for the bonus credits. But if you don't collect all of the documentation and data and compliance requirements, you could miss out on those. And so that's kind of where our value comes, is that one, we know the requirements of the compliance and can give you the advice needed, but two, we have the system. So we talked about a little bit prior. Our system, EDOIQ, is proprietary SaaS system, and it can help automate the compliance process. So let's say that you're over that 1 megawatt, because there's probably some people on the call here that are going to be producing over 1 megawatt. Well, in order to get that 5 times multiplier, you're going to have to be paying prevailing wage and using apprentices. And it's not just you, it's you, your contractors, your subcontractors. And so collecting all of that data and documentation can be really burdensome. So what happens is our EDOIQ system can API into operational systems, pulling that data from your subcontractors or contractors, from you, aggregating it in one place, and then reconciling it to see if you're actually going to meet the prevailing wage and apprenticeship. And it gives you real-time feedback. So let's just say that one of your subcontractors is not paying that welder that extra $1 an hour that's required for the prevailing wage requirement. Based on the system, if you have it all automated, you'll get real-time feedback for you to correct that immediately and pay that extra $1 an hour, so that at the end of the year, you're not scrambling and realizing that you're going to miss that 5 times multiplier that's so valuable. So that's one of the best practices, especially if you're over 1 megawatt. If you're less than 1 megawatt, things that you might want to keep track of for the domestic content is all of your invoices for that cost center. So you can actually API into your accounting system and be pulling out the value of invoices, and then identify those vendors that have certified that they're going to be domestic or not, and then it aggregates the data and pushes out the multiplier, if you're going to meet the 40% for machinery and equipment. So compliance, right? Especially, let's talk about it. Like the recapture for the investment tax credit is how many years again, Macy?
For the investment tax credit, you could look at up to 6 years.
Okay. So there's potential for recapture if you have an audit go on within 6 years. So there's a lot of different forms for monetizing these credits. So this is the first time they've ever been transferable, which makes them very valuable. So let's say that you use tax equity investment to pay for some of your development. So that tax equity investor is giving you money up front with the promise that you're going to give them the tax credits that they can use to offset their liability. Well, one, these credits can only be transferred once. So you can't transfer it to somebody and they transfer it to another company or entity. They can only be transferred once. But the liability for recapture actually lives with the person that's purchasing the credits. And so if you don't have these compliance documents and data stored and ready for verification by the Treasury Department, you could be putting that purchaser of your credits at a liability for recapture. So this is where it gets really complex. And like I said, we always recommend people consult with a tax advisor to help you navigate these types of scenarios. I compare it to chutes and ladders, right? You're constantly like, do I qualify? Do I have the bonus credits? Am I doing the compliance? How am I going to monetize these? There's a lot that goes into these credits, but a best practice for any incentive always is please keep track of your documents and your data for audit defense.
Caitlin?
Absolutely. Yes, ma'am.
What you're saying sounds to me like having something like this up front as part of your project design as people are looking for tax equity funding, having that up front or knowing that you're going to utilize that as part of your package as you're going toward those fundings that could be considered de-risking the project, could it not? That seems like it'd be very attractive to equity investors as they looked at a project.
Yeah, if I was an investor in these tax credits, I would mandate that they have a system and process in place to prove the value of it.
Everybody heard that. That's a valuable tip for no money right there, guys. Write that one down.
Yeah, and then, having very open and honest discussions with your contractors and subcontractors and letting them know from the beginning that they're going to have to pay these wages, they're going to have to hire these apprentices if you're producing more than 1 megawatt, and then letting them know that you're going to be pulling that data so that you have it in your system, as opposed to waiting until you get contacted by an auditor in 6 years, and then you have to go scrounge around, find that subcontractor, hope that they still have the payroll data. I mean, it could be a mess. So proper planning will make this so much easier.
Yes, it's really important to mitigate the risk when you're claiming these credits, because the worst that can happen is it's going to get recaptured, and then that would just be awful in the event of that. So planning ahead, mitigating the risk, and having systems in place is the best thing you can do for your company and your project.
Yeah, especially thinking about the value of these, right? So let's say that you were offsetting 50% of your total CapEx, and then 50% of that gets clawed back by the IRS. It could put a lot of people in trouble, especially if you're leveraging these credits to secure your financing.
Yeah. Lady, I'll tell you what, I want to make sure we get to state and local content. So if we can, we got about 2 minutes before we need to start taking some questions, but let's definitely hit the state opportunities that are available for funding.
All right, so these are other funding mechanisms that you can use to finance your project. I'm going to start actually at the federal level. So there's some federal grants that really fit this industry well. One of them is by the USDA. It's called their REAP grant. So the REAP grant has quarterly submission deadlines, and then the REAP grants could be up to $1 million in value. So that's one of them that we always recommend people look into, and we've submitted countless REAP grants over the years on behalf of our clients. The other one that I like to talk about is the Wood Innovation Grant through the Forestry Department. That one's also quarterly and up to a maximum of $1 million. So these are very valuable federal grants that you can layer in with these credits to finance your project. At the state and local level, this really gets into our site selection services. So before a project is announced publicly, it's worth looking at your state and local economic development programs to see if there's any incentives available. At the state level, there's usually a job tax credit or an investment tax credit. At the local level, there's usually a property tax abatement that could be placed in service, because let's face it, you could not make money and not have an income tax liability, but you're always going to have to pay property taxes. So if you could get that abated before you start the project, that could be really valuable.
Yes, there's funding at all levels. So it's really important to consult with someone who's familiar with all the different levels of funding about your project, because there's huge potential to offset significant cost or just help your company with those annual expenses that can get really tiresome.
Yep.
So, we definitely want to give time to get into some questions. So I have the Q&A pulled up, and I'm just going to start rolling through some of the questions that we've had submitted. And Caitlin, I have some questions here that were written in earlier. So if you see any on that list that we want to touch on, feel free to interrupt me at any time. But starting off, what is the 1 megawatt requirement? Is the 1 megawatt hourly or annually? This is something I don't know if we covered, but we definitely should. 1 megawatt is measured in alternating current annually. So if you're under that threshold of 1 megawatt measured in alternating current annually, you're going to receive the bonus credit under the ITC or PTC, and you can multiply that base credit by 5 times, which is a huge increase.
Yeah, I think that that need to be clear on that. I think the best way to assess that is by the nameplate of the equipment. When it says, like for instance, our equipment comes in 75 kilowatt, 150 kilowatt, and coming soon to a theater near you, 300 kilowatt, that is our nameplate. That is significantly below 1 megawatt. So if your nameplate is below 1 megawatt or at 1 megawatt and operating slightly beneath it, you should meet that criterion as described.
That is correct. If your nameplate does say 1 megawatt, I want to just remind compliance, and records, because in the event of an audit, if you don't have the records supporting that you produce less than 1 megawatt, they're going to default to the nameplate.
And we have seen that as well. I completely agree with that. We've seen that internationally. It is also good if you have a system that will interface with our control system and can monitor that. We actually are able to pull up reports that will very clearly indicate exactly how much power has been created, not only actively, but through the history of the machine. So we are able to provide that type of support to almost anyone who would need it as part of their project.
So here's one asking about RECs. I think there's a lot of confusion between RECs carbon credits and then these federal income tax credits. So RECs are not directly linked to your federal income tax like these are. So they're really two different systems, two different incentives. We do not actually consult on RECs. However, our SaaS system helps with RECs compliance. So I just wanted to put that out there, that if you are claiming RECs and you need a system to help with compliance for your RECs, EDOIQ might be a good option for you.
Yeah, and that's a whole other webinar. That's a big topic. We'll have to do a follow-up on that maybe.
Yes. So I have a question here in the chat. Can we utilize these credits if we are a recipient of federal grants that will be applied to capital expenses? And that is absolutely. The federal government offers many different forms of funding. If you're qualifying for a federal grant like the REAP grant, that's going to put money towards your capital expenses, you can still qualify for the ITC or PTC and get a credit towards your income tax as well. So that's a great question and a great opportunity for people who have received federal grants.
This is a question, and I'm going to cover it really quickly. Please identify statutory versus non-statutory tax incentive programs. So statutory tax incentive programs meaning that if you meet the qualifications, you can just claim it on your tax return. So the federal tax credits that we're talking about, ITC, PTC, those are considered statutory. Non-statutory incentive programs are ones that are negotiated, so they're considered discretionary. We see most of those at the state level, where you're negotiating the value of your incentive program before you're starting the construction.
I'm so impressed. That's such a smart question. We have such a smart group here. That is really smart.
Yes. So I have another one here. Is there a possibility that the construction start date will be extended beyond 1/1/2025? And the truth is, we don't know. It's completely dependent on election, who comes into office, what laws are passed, and if they want to extend it or not. Fingers crossed they do, because it's a great credit in my opinion, but there's just no way to know at this point in time.
Yeah, I feel like the ITC is going to be extended. The transferability will stay in place. What will probably be affected is the percentage, the value of the credit.
Yes.
So that 50% target could, after January 1, 2025, we may have an ITC, but it may not be as rich. Is that what you just said?
Exactly.
Okay.
Okay, when is the 48C application deadline? So this is interesting. We did not talk about 48C today for a number of reasons, but 48C is similar to the ITC, except it requires an application. So it's not considered statutory, it's considered non-statutory. So our recommendation is go ahead, submit the 48C application, do your best to try to get that funding, however, have a backup plan. And your backup plan is going to be this ITC or PTC. We submitted a bunch of 48C applications last year. I think that they received probably 100 times what the actual value of the grants were. So it was a very stiff competition year. So we didn't talk about 48C because we think it's a pretty low percentage chance of getting that funding.
Yes, 48C is going to be really focused on innovative projects with high capital investment and high offsets. It also focuses on certain minerals. So while these projects do qualify, it might be a stretch to claim that. And so we just want to make sure everyone's prepared for that. So that's not one that we usually recommend, but dependent on your project, it is an option, and that would be something I recommend consulting someone about because they might advise differently dependent on your project. I do want to bring up some people classify 48C as a grant. Anything that's passed under the Inflation Reduction Act is non-stackable. So 48C, although it is technically a federal grant, that is one grant that is not stackable with the ITC. However, a federal grant through the USDA or the Department of Forestry absolutely is stackable with the ITC or PTC.
Yeah, so if you're thinking about these fund numbers such as 45, 48, just keep it in your mind, you cannot combine them.
Yes, that is correct.
So regarding that question, most of the central lane projects that we're talking about here, that most biochar projects, probably not a good bet for that innovation piece for the grant.
Probably not. So one of the qualifications under 45C is you have to be reducing carbon emissions by 20% or more.
48C.
48C. I apologize. 48C, you have to be reducing carbon emissions by 20% or more. If the ORC and pyrolysis system is not directly related to your facility's overall goal, it's unlikely that you would meet those qualifications or be able to argue it in a fashion that this is a great project that's making an innovative difference and greatly reducing. Doesn't mean it can't be done. It just a lot of difficulty with 48C, and we like to be conservative advisors. And since the ITC is available, and you can get up to 30%, 50%, depending on where you're located, then we would recommend going with the ITC.
Thank you. That's a great clarification.
Absolutely. I have a lot of questions in the chat about specific projects, and we can get into some of them, but in the chat and following an email, I'm going to send out a Google form where individuals attending today can go through and fill out information specific to their project. And we will prepare a tax memo and tax opinion on their project for the amount that we think that they could qualify for. And these memos can be used to sell these credits, offer how much is expected to be returned if the credit is claimed. They're a great use for a company to have on hand if they're looking at claiming the ITC or PTC credits.
Right. Yeah. And the tax memos also go into detail on best practices for collecting that compliance and making sure that you're going to qualify for those bonus credits. So that link is coming soon. So if you're interested in getting more detail and specifics around the value of your project, we can definitely help you out offline.
Yes. One of the scenarios that I will touch on is for a new biochar and combined heat and power system, would the Section 48 ITC apply to all equipment, including the pyrolysis units, or just the waste, heat, recovery, and ORC equipment. So that system sounds like it would qualify for more because a combined heat and power system is one that qualifies under Section 48. But again, we will always advise consulting the intricacies of your project with someone who's familiar with the federal tax code, because there's a lot of clauses in it and a lot of items that were grandfathered in or sunsetted out when the Inflation Reduction Act passed. We've worked with a number of clients that have installed systems similar to the ones we're discussing today, but the overall function of their facility falls under a definition of open loop biomass facility or something else, and they can qualify for even more credits, but that really gets into the weeds.
Yeah. I mean, navigating this, the tax code and the bill, I mean, it's like playing chutes and ladders, right? Like you have to go here and then it references this definition and this time period and various sunset dates and changes to the program. So that's why it is important to, get a one-on-one consultation with a tax advisor that can really focus on the intricacies of your specific project.
Okay. We have time for about 2 more questions, and I'm just going to say I'm never going to look at chutes and ladders the same way again, Caitlin. So thanks for that. But yes, about 2 more questions. There's one here I want to answer. Someone asked us a very core question. Can you extract heat from water and produce electricity? Henrik, yes is the answer. That is our core competency. It is literally what we do. If we have between 150 degrees and 300 degrees Fahrenheit water, we can create energy, or we can produce electricity from that. In most cases, that'd be 77 to 150 degrees Celsius. But otherwise, ladies, one last question I think we have time for.
Yeah, so there's one here in the chat. So if the pyrolysis unit is built in the US, does it qualify for the ITC? I just want to go back to qualify for the ITC. Your system has to produce clean or green or renewable energy. To qualify for domestic contents, 40% of your system needs to be produced in the United States.
Yes, that our ORC, the Electrotherm ORC, does have domestic content. Whether or not your entire project constitutes domestic content is a function of what the scope of delivery is and where your additional components came from, correct?
That is correct. So if your entire project is just installing Electrotherm's ORC system, then most likely you will qualify for the ITC and the domestic bonus content. But if your project includes more than just that system and has other intricacies, then it's possible you could qualify for more or less or something different.
Oh, that's helpful.
Yeah.
A very definite maybe. I love that. All right. With that, it is 12 p.m. Ladies, I cannot state enough how grateful I am that you joined us today. If you would advance the slide for me, Macy, I'd be grateful.
Absolutely.
If we can, any questions that we were not able to take, if we can receive those by email or whatnot, we will be more than happy to respond. As they said, we will be sending out the project assessment form for KE Andrews. Additionally, you will have we will send the webinar information for all attendees, and we will make sure that the link for the Treasury map is also included in that, so anyone is able to assess that information for themselves. But otherwise, we are very grateful. Caitlin, Macy, thank you for the fantastic information today. Cannot state enough how much value you brought to this. Thank you to all the biochar professionals who took time out of their busy, dusty days to spend with us. And we look forward to speaking with each of you as it's valuable to you. So have a fantastic day, and we'll talk soon. Take care.
Thanks, everyone. Bye-bye.
Thank you, guys.